Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, March 6, 2020, and we again find ourselves in the final hour of the trading day and the final day of the trading week. Thank goodness. Anyway, I hope everyone is doing well today. Thank you so much for coming by. It's always nice to see everybody. It's been a crazy volatile market today. Again, this week has been unreal. So, like I said, we're in the final hour of the trading day. I prefer to make the majority of my buying and selling decisions during the final hour of the trading day, and in particular, the final few minutes of the trading day. During the day, you have the algorithms, you have the day traders, they're battling it out. At the end of the day, you have the large financial institutions. They come in with size, with the best knowledge, with the best technology, best information, and they take the pricing away from the day traders during the day, and they move it to what, in my opinion, is the best and most valid price to make your buying and selling decisions from. So anyway, let's see. We have Evan here. Good to see you. Always nice to have you here, Evan. Steve says, hey, good to see you, Steve. Thank you for being here. Thanks for including me on your list today, on your trader list. I always appreciate that, and always appreciate you being here. It's always an honor and a privilege to have you here. Steve says, I hope everyone is staying safe in this market. Oil futures down 10% at one point today. Yeah, it's literally unbelievable. It's unbelievable. I mean, this is historic, and I hope everyone out there is following their plan, position sizing correctly, all the things we talk about, because boy, I'll tell you what, this last week did a lot of damage to people and their trading accounts and their psyches. Gamer Squad, hello, good to see you, my friend. Always good to have you here. Hello, Kamal, nice to have you here. Nice chatting with you earlier. Joe, hey buddy. Hello, Greg, Steve, and everyone else. Hello, Joe, nice to have you here. Hello, Bob, good to see you. All right, well, Dow is down 843 points again, down 3.23%. NASDAQ is down 353 points, down over 4%, and the S&P is down 3.91%. Just an epic market. Just this sell-off has been unbelievable. It's like nothing I don't think I've ever seen anything like this with these point moves during the day. So anyway, listen, here's the plan for today. As always, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions. Going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. After that, I do have a couple day trades that I'd like to show you. One positive, one negative, but net positive, I'm happy to say, after my regular positions today. After that, we have a few of you that have some trades up on the board. We're going to take a look at those as well. After that, we're going to talk about trader psychology. Never more important than talking about trader psychology in a market like this. So we're going to spend a few minutes on that. After that, I have gone through my watch list. I have identified a couple potential entries today. I'm not sure. We're just going to have to see how they close. I have three requirements when I enter a trade. Requirement number one, I look for a confluence or a combination of indicators. I look at each indicator as a potential group of buyers, and so you're going to put yourself in the best position to have a profitable trade if you can get in with as many other buyers as possible. The more buyers, the better. So therefore, if I look at one indicator as a group of buyers and then there's two or three or four other indicators that line up with that, then I look at that as two or three or four groups of buyers. And like I said, the more buyers, the better. Doesn't mean you're going to have a profitable trade, but in my opinion, it really does increase your chances of doing so if you're with as many other buyers as possible. Step number two, I want to make sure I have a good risk to reward. It's always important to have a good risk to reward. If I'm going to risk $100, I want to be able to make at least 200 or more to the upside. And then number three, very important, especially in this kind of market, I have to take into consideration account heat. And when I say account heat, I mean how much of my total account do I have at risk. I never want to use more than 60% of the capital I have available in my account. And then I don't want to have too many correlated positions either. I don't want to have 3 tech stocks. I don't want to have 3 healthcare stocks, right? I want to divvy it up, have different industries, and ideally have something outside of equities like gold or silver or oil or bonds, just so you have even more diversification. So like I said, I have a few that possibly look okay. We're just going to have to see where this closes today before I can make that decision. And then after the market closes, if anybody has any questions, please let me know. I'm happy to clarify anything I discussed today. If you would like me to take a look at a symbol before the close of the day, and you think it would be helpful for the group, please do me a favor and put in the symbol into the chat, but make sure you put an asterisk by it or a star by it or something so I know it is time sensitive. So okay, that is going to be the plan for today. So if you could be so kind and hold on for about 40 seconds, I'll be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. All right. So Grant X is here. Hello, Grant. Good to see you. Hi, Dan. Always good to have Dan. Kamal. TLT is soaring. Let's take a look here. Yes, it is. There's bonds. Look at bonds, everybody. Unbelievable. Everybody's flight to safety. Evan says, am I the only one that still sees the live stream will begin shortly screen? Has it changed? It shouldn't show that. Dan says me too. Yep. Huh. Well, let's see if it works. Let's see if it works itself out. Joe says, I think this is a poem. We're in this together as it goes up and down. We sit on our hands hoping it will turn around. A lot of prices dipped and a lot of prices swirled, but we all stick together and trade around the world. So great, Joe. Thank you, sir. Let me save that so I can put that up there later. We're in this together as it goes up and down. We sit in our hands hoping it will turn around. A lot of prices dipped and a lot of prices swirled, but we all stick together and trade around the world. How great is that? Oh, good. Screen's good now. Okay. Marco's here. Hey, good to see you. Steve Burns says VIX broke out to a new high. I would imagine so. Mohammed, good to see you, my friend. Hi, Greg. Hi, fellow traders. Hello, Mohammed. S&P index down almost 10% today. Unbelievable. Frank. Hey, Frank, good to see you. Hello, Greg and group. Need I say wow? You don't need to say wow because it is wow. But you can say it. Dan says, Steve, about to read your book in Darvis. Really enjoyed the Darvis book. That's a great book. Yes, it is. Grant says, hi all. Yeah, it's crazy out there. Mount Doji, how's it going, fam? Good to see you, Mount Doji. Zach, good to see you. Grant says, Gregory Gossett is a disciplined trader. He follows his plan just like Ralph. Oh, this is a poem. Gregory Gossett is a disciplined player. He follows his plan just like Ralph Nader. The NASDAQ is twerking like young Miley Cyrus, but never will compete with the fear of a virus. Look at this group of poets we have here. This This is unbelievable. Gregory Gossett is a disciplined player. He follows his plan just like Ralph Nader. The Nasdaq is twerking like young Miley Cyrus, but never will compete with the fear of a virus. Evan says, screen is good now. Thank you, Grant. Appreciate that. VIX is moving without SPY going down. Interesting. Interesting. Good observation, Kamal. Well. I'm almost speechless, to be honest with you. I am literally almost speechless. So, all right, let's take a look at my current positions, as ugly as this is going to be, but we're going to have to do it. Okay. Goldman Sachs, dang it. I took a position in Goldman Sachs when we rejected the 30 RSI yesterday. It was holding this previous low. That's what tipped me over the edge to take it. Fortunately, I did only take a half a position. Like, not happy about the trade, obviously, but I did only take a half a position, and I hit my 5% emergency stop. This is happening way too often. It seems like it's happening almost every day. So anyway, down 4.32% today. Unfortunate. I don't want to get out, or I didn't want to get my emergency stop, but I had to. Those are my rules. And so anyway, would I take the trade again? Yeah, I probably would, to be honest with you. I like the under 30, over 30, and it held this previous range here. But it did not work out, unfortunately, and this has been a tough week. So anyway, I already got out of that. If I get 5% below my entry point before the end of the day, that's an emergency stop, and I have to just go ahead and get out. Silver. So, all right. Well, I did buy silver back here on the 4th of March. The day before, we went under the 200, over the 200. I could have bought it there, but I decided to wait for the next day, and we came down. We tested halfway of this washout bar. I decided I like that, and then it closed above the previous day's close. Still above the 200. Felt like it gave me a good risk to reward. Went up yesterday. We hit one profit target. Haven't hit too many profit targets lately. Today, you can see it came all the way back down right to the 200-day exactly, and then bounced right off it. So it looks like it's going to close above the previous day's low. Actually, it has not moved more than one ATR for my entry point. So even if it did close below the previous day's low, I would have kept it. My initial stop here is the 200-day moving average. If it moves more than one ATR away from my entry, if it moves 34 cents away from my initial entry, then I will institute a trailing stop. So anyway, this is down today, but only down 0.5%, so it feels like it's up. SPY, man, what a stinker this has been lately. So in case we have some new viewers, I do want to go over quickly why I do buy the SPY every single day at the close of the market, and I sell it first thing the next morning. This is a back-tested study from Lizanne Saunders at Bespoke Invest. Since 1991, they tested two approaches to trading SPY. The first approach was to buy the SPY at the open each day in the morning, sell it at the close each day in the afternoon. If you use this approach to buy the open, sell the close every day since 1993, you've actually returned a negative 13.9% return. However, if you do the opposite, which is what I do, and buy the SPY at the close each day instead of the open, sell it first thing the next morning. So buy the close, sell the open. Buy the afternoon, sell the next morning. You've actually returned 634.2% return. Past performance is no guarantee of future results. That is true. That goes for any trading approach. But if I'm going to allocate capital, I'm going to allocate it towards something that has good backtest results compared to something that has bad backtested results. You can see the blue line is the buy in the afternoon, sell the next morning. It definitely has its ups and downs. I'll tell you what, I feel like I'm in one of these right now because it has not been profitable this year. Last year, in 2019, it was nice and profitable, but this year has been a struggle. But, you know, all of my trades I look at as just one of the next 1,000 trades. I like to vary my trades. I don't like to have the same approaches to trade. That's why I do like the overnight SPY trade. It's more of a short-term overnight trade, but in the long run, this has worked out fine. And I sure hope it does in the future. But in the short run, I am in something like this at the moment. So that being said, I did buy SPY here yesterday at 302.46. Got out this morning at 293.70 for a whopping loss. So 2 big day losses in a row. It's been negative on the year. It's definitely been challenging. All I can say is I'm glad I've only used a 10% position size. So, if we look at this, 2.88% loss on the overnight trade, but it's only a 10% position size, so it's really only a 0.28% of my total capital. So anyway, not trying to rationalize it. This is just how it goes. I remember back in May of 2019, I think I lost 80% of my overnight SPY trades, and this month, February and this month, are shaping up to be the same. But on the other hand, I did come back from it. I don't know if I will, but it is my plan. I stick with it. I don't want to take the trade, but I am taking the trade because that's what my approach calls for, and that's really all we can have, right? Is just our approach and what we and our plan and following it. Now you can change your plan if you decide you don't want to, but I still like the overnight SPY trade even though it's been challenging. All right, well. Intraday trade. Intraday trading is tough because there's just not a lot of movement. However, in this market with 800,000 point days, there is a lot of movement for day traders. So that's why I have actually made a few trades, a couple trades every day. This is the 5-minute chart. I did buy Exxon here at 47.78. We closed below the -1 ATR channel. We came back in. We made a nice higher low V1 here. Here is day 1. Here is day 2. Day 2 washes out day 1 to the downside, then reverses and closes back above. Day 1's close. I got in at 47.78. I do want to point out, see the -1 ATR channel here? I do like when I have a V1 with a rejection of the -1 ATR channel, and also higher low is also nice. So I did buy it here, like I said, 47.78. It moved up nicely, made higher highs. Didn't close below the previous day's low, didn't lose the 50 RSI. I did sell it out here when we rejected the 50-day moving average. If we would have fell below the 50 RSI, that would have also been a trigger for me to get out. But I did get out here when it rejected the 50-day at 48.24. So I got in at 47.78. And I got out at 48.24. So on a $40 stock, that's pretty good. After that, it continued to go up without me, but as it turns out, it really was a good place to get out. So Apple, I took a trade on Apple here on the 5-minute bar intraday. When we had the 5 EMA cross over the 20, I also like that we were above the 1 ATR channel. We came into the value zone and then actually had a higher low V2 on top of it the same time it had the 520 cross. It initially moved up great, and I haven't been phasing out of these because it's such a short time frame, and it's kind of fun for me to just trade one entry, one exit, because I normally don't do it. But anyway, moved up nicely right away. I was like, okay, good. I think I've got a good one. But I did have to get out here at, I got in at 286.40 and I got out at 286.36. So I lost 34 cents, not too bad. The reason I got out here was because it closed below both the 5 and the 20 EMA. That was my stop. So it was a nice profitable trade for a minute, but it turned into a pretty small loss. And actually, I mean, it's never fun to take a loss, but you can see that obviously I was very happy to take it there, because after that it just went down and down and down and down and down. So anyway, 4 losing trades, 1 winning trade. Not so great. Not so great. This has been a difficult week for me. Definitely been a difficult week. But that's how it goes, right? I mean, the key is that we keep our powder dry, we trade correctly, so that when the market does eventually turn around, one, we can participate in it, and two, we're not so beat up from an emotional standpoint that we just are like, ugh, I don't even feel like taking another trade. And position sizing, in my opinion, that's the way to do it. That's the way to do it. Having a conservative position size so that if you lose, okay, you lost, but in the big scheme of things, it's not that much, and you still have some wind in your sails to take the next trade when it comes along. Okay, take a look here. Glenn bought Amazon back here at 1898. Stop was a close below the 200-day. Next day it gapped down, then rallied nicely. But I think yesterday he was going to stay in this as long as it closed below the previous day's low. This definitely looks like we're closing below the previous day's low. So Glenn, not sure if you're out there, but if you are, let me know if there's any changes on this particular trade. Okay, Evan. Look at Evan, everybody. Thank goodness somebody had a positive trade today. Evan did buy PPLT back on the 3rd when we went under the 30, over the 30. Next day went sideways. Yesterday it went down a little bit, but did hold the 30 RSI. Today up 3.61%, which is fantastic. Fantastic, Evan. So glad to see you have that. So anyway, it looks like it might reject the 200-day here. If there's any changes on here, you just please let me know, okay? And that's about it. Joe says, nice one, Grant X. I agree, Grant. Kamal says, emergency stops galore. I've hit more emergency stops in this year than I did all last year combined. Hey, Bing He, good to see you, buddy. Mount Doji says, any thoughts on DLTR? DLTR. Yeah, it's pretty nice. That's pretty nice. Bullish engulfing bar. Nice V1, under 30, over 30. I'd like it better if it could close above that 3rd ATR channel, but it does give you a good risk to reward there, right? If it closes below the 30, it's hopefully you take a small loss, but you might be able to rally all the way up to the 50 RSI, which is probably right around here, or the 50-day moving average. Let's look at the weekly. Weekly is holding the 3rd ATR channel to the downside, so that's somewhat positive, but of course we never know, but it does offer a pretty good risk to reward ratio, and I do like the relative strength here today. That's for sure, that it's up on a down day. Casey General Stores. Yeah, this looks pretty good too. I mean, we have a V1, we have a rejection of the 200-day, we're above the 50 RSI at the moment. If I were to take this, I would probably use a close below the 50-day moving average as my stop. Close below the 50 might be a little tight. I mean, you could. There's pluses and minuses to both. So, if you take this, I don't think I would take it if it closed under 50 though. If it closed over 50, me personally, I'm not telling you what to do, but me personally, if it closed over 50, I'd probably take it. If it rejected 50 today and closed below, I probably wouldn't. Although I would probably give this a little room because of all the volatility. You have this confluence of the 100-day moving average and the 50-day moving average here as well. Keep in mind, you do have earnings coming up as well. Evan says, Orly. Yeah, so a few things going on here. Okay, yeah. So We went under 30, over 30, plus a V1, rejected in the negative third ATR channel, and see this previous low? We had a false breakout to the downside. So all in all, this is pretty good. Rejection of the negative third ATR channel, V1, false breakout to the downside from this low, under 30, over 30. Yeah, pretty good, Evan. Zach, I've said it before, Greg, but I'll repeat again. Thank you so much for showing me both the winners and the losers. Keep saying how refreshing it is. Yeah, well, no sense in not showing you everything, right? I mean, I think it's good to see losers, that you see, for one, that I try to keep losers. I mean, they happen, right? But hopefully I keep them small, right? But I've had a lot more luck in this last couple of weeks with my day trades than I have my regular trades. So anyway, it's helped a little bit. It's definitely helped a little bit. But today the Exxon trade, made more money than the little Apple trade lost. So every little bit helps. Frank says, "Oh, okay, I think this is a poem from Frank. Jobs are abounding from top dogs to clerk while money is out looking for work. With rates so low, cash can't grow for the Wall Street impact, deep and profound, all markets suffer a nervous breakdown." Let me take another shot at that. Jobs are abounding from top dog to clerk while money is out looking for work. With rates so low, cash can't grow. For Wall Street, the impact is deep and profound. All markets suffer a nervous breakdown. So good. As always, Frank. Thank you, sir. Appreciate that. All of you have had great poems and so on point, so on point with what's going on in this market. Casey, I think I looked at Casey, didn't I, Mount Doji? Yeah, bounced off the 200-day V1. Believe it's a V1. Yeah, it's a V1, higher low V1, bounce off the 200-day. Could be worse. If I took this, if it rejected the 50-day moving average, I probably would not take it. But if I did take it, I would probably use halfway the washout bar. Kamal, TGT. I looked at this earlier. I liked it better. Kamal, when it closed above the 200-day. Me personally, I probably wouldn't take this unless it closed above the 200-day. I don't think it went under 30 RSI either. No, it didn't. So, you would have a higher low close above the 200-day, decent risk to reward ratio. But yeah, I liked Delta better. We were looking at Delta, but now Delta, Delta was similar to, what was the one? Orly, I think. We went under 30, over 30, V1, rejected this previous low, although now we are not under 30, or over 30. We're still under 30. So listen, before we get to my picks of the day, or before we go through the ones that I identified as possible new positions for the day, I do like to do a few minutes on trader psychology. It's very important. It's important to learn how to trade, support resistance levels, putting together a plan. But once you do that, if you can't follow your plan, you're in deep trouble. You really are. You're going to sabotage yourself by not following your plan. So I do like to look through Twitter. I do like to look through Facebook. There are some really good channels out there that provide some really good daily trading words of wisdom. And I like to look through there and see if I can find something that I think would be helpful for the group. This is from Stephen Goldstein, our friend Stephen Goldstein at AlphaMind 101. If you haven't followed him, I would suggest it. Stephen was a professional trader. Now he's a professional trading coach. He has a great podcast, the AlphaMind 101 podcast. You can subscribe to him on Twitter and you'll be able to find it, but the Alpha Mind podcast. But Stephen says, despite the difficult challenge trading offers, the high attrition rate and low success rates, there are some who succeed. They all suffer huge setbacks, torturous mental battles, periods of self-doubt, and never boasted of trades on Twitter. The journey is not meant to be easy. Well, isn't that the case? I mean, let's break this down. Despite the difficult challenge trading offers, the high attrition rate and low success rate, there are some that succeed. Most people fail at trading. Most people fail, right? The attrition rate is high. The success rate's low. I've heard upwards to 80, 90% of people that trade lose money. But there are some that succeed. And honestly, the ones that succeed are doing the opposite of what the ones that are not succeeding are doing. And it's difficult to do. Even the ones that succeed, they suffer huge setbacks. I can't tell you how many huge setbacks I've experienced in trading. And, the only way to come back from those setbacks is if you haven't gotten beaten up too much. If you've gotten beaten up too much, it's difficult to come back. Torturous mental battles, well, absolutely. I mean, it's just, you doubt yourself. Do my setups work anymore? Is the market ever going to turn around? Periods of self-doubt. Of course, I've had this so often, right? Anytime I get into a drawdown, it's just human to have self-doubt and never boasted of trades on Twitter. I don't know what to say about that. I don't think I've ever posted any of my trades on Twitter. But the journey not meant to be easy, and it's not easy. And that's why there's so much opportunity for people that can do counterintuitive things, go against what they want to do. And remember, I actually got this saying from one of Steve Goldstein's client, but profitable and successful trading is doing the things, taking the trade when every fiber in your body tells you doesn't want to take the trade, or not taking the trade when every fiber in your body wants to take the trade, right? So, this occupation is very difficult, and it always comes back to trading psychology and following your plan. The best way you can do that, in my opinion, is position size correctly, conservatively, so that if you do go through a drawdown, you still have a little wind in your sails. You're not so disgusted and beat up that the next trade comes and you just don't feel like taking it because you've gotten beat up so much, right? So anyway, I mean, that's about how I feel in this week right now. Like, I don't want to take any trades, right? Just because I've gotten womped up on this week, but I will take them if they're valid, because I know I have to, right? That's one of the keys to success, is taking the trades that you don't want to take if they're valid, and then not taking the trades that you do want to take if they're not valid. So anyway, thank you, Stephen. Appreciate that, sir. And check out his podcast, the Alpha Mind Podcast. Oakley dokley. Frank says, stock setups are just getting obliterated in this market. For me, cash is the best position. Good point, Frank. When I studied with Dr. Alexander Elder, there's 3 positions. You can be long, it's a valid position. You can be short, it's a valid position. And you can be in cash. That is also a valid position. It really is a valid position. I traded a friend of mine's account, bought some puts for him a couple days ago. Wish I'd have bought some for me. Almost doubled the puts in 2 days. Isn't that something? All right. Well, let's just take a quick run down through everything and just kind of get an idea of what's happening. Let me get rid of that because that was my Apple trade intraday. I don't really see a trade here. I mean, we have rejected the 100-day moving average, holding above it. If you're dying to get into Apple, then a close below the 10-day, that might be something to or the 100 might be something to consider. We had this low, we made this high, we came back to about 50% of the move from here to here. So it did kind of bounce in that halfway Fibonacci point. But really not a clear signal. I'll tell you one thing about Apple, though. These big these big moves down in the market right now kind of shows you the relative strength of stocks. I mean, look at Apple. We're still above the 100-day moving average. If we go, I mean, almost all the other stocks we're going to look at today are below the 200 or near the 200. So the relative strength of Apple is pretty good, actually. It is pretty good. So I don't think I'm going to take this here, though. There's not enough of it for me to take. It's just a bounce off the 100-day moving average. If it was with the 30 RSI, I might consider it. So nothing on Apple for me. I'm going to go through these pretty quickly. Adobe, nothing here, nothing here. Amazon, nothing here. If we went under the 200 and back over the 200, that's where I would be interested in getting in Amazon, giving me a little better risk to reward. Boeing's hanging in there pretty good today, only down $1.85. Looks like it was even up earlier, still under the 30 RSI. Berkshire Hathaway, boy, we had that big bounce, didn't we? And did it fail? It failed hard. So nothing here. I might be interested on Berkshire if we can go under 30, over 30, especially if it lines up with that previous day's low. Beyond Meat, nothing quite there yet for me. Caterpillar. Looks like it bounced right about the 30 RSI. Did have a bit of a false breakout to the downside. It's okay, I suppose, but I don't think I'm going to take it. DDM, which is the double leverage Dow, did not go under 30, over 30. That's what I would be looking for. Dow Jones, obviously the same. To the double leverage, looks the same anyway, but didn't reject the 30. Walt Disney, still under the 30 RSI, so nothing there. Etsy's been really strong. Etsy's been really strong, but nothing here. I'd wait for a pullback to value. Facebook just getting clobbered again. Well, this is under 30, over 30. Let me check something real quick. Where am I? Yeah, I mean, it's under 30, over 30. Look, I'll mark it. It's a potential. Gold has been all over the place today. My goodness, nothing on gold. I do kind of like Google. I like the bounce off the 30 RSI and the rejection of the 200-day moving average. Let's see, where did we get to at the low here? 31.71. Google's okay. It's a good, big, strong company. Currently, we did have a false breakout to the previous low, and right now, I don't know what's going to happen at the end, but right now it is a false breakout to the downside. It bounced at the 30, and it bounced off the 200-day. So that one looks okay. Goldman Sachs, my 5% emergency stop, nothing there. Home Depot, nothing there. IBB, don't really see anything there other than the bounce off the 100. Intel, I take another swipe at Intel if it bounced off the 200-day down here in the low 30 RSI, but it's not quite there. Russell 2000 still under the 30 RSI. Johnson & Johnson, don't see anything there. CarMax is another one I got whooped up on. Good thing I got out yesterday though, because look what happened today. So nothing on CarMax. Coca-Cola. Glad you didn't take that 1050 EMA crossover, Bing He, because that one would not have worked out so hot. Nothing there. Lockheed Martin, boy, did that have a huge day up and then gave it all the way back. So nothing on Lockheed Martin. MasterCard, potentially, if it closes above the 200-day, it's possible. So I've marked that. McDonald's, I don't see anything there. Merck. Nothing really there. Microsoft, nice bounce off the 100-day moving average. Man, down 4%, 4.5% today on a company like Microsoft. Netflix, nope. Nike, I don't know if anybody was still in Nike from yesterday. I don't know if that closed under the 200-day or not. Well, it closed 1 penny, but that would have been hard to manage at the end of the day. So technically you should have gotten out of this. If not, yeah, dang. But anyway, I'm not sure if anyone's still in Nike. Philip Morris, nothing on Philip Morris. PayPal, rejected the 200-day. The Qs, I would buy the Qs if we could test this 200-day again. Silver we have, looks fine so far. At least it's positive. That's haven't been able to say that about a lot of things lately. Had the overnight loss SPY trade here, so I am buying that again at the end of the day. Bonds are just, I mean, talk about parabolic. I mean, it's insane. It is a little bit of a bearish bar here. We close below the open, even though the close is above yesterday's close, this could be a little bit of a toppy bar for sure. Tesla. Don't see anything there. Twitter, do not see anything there. UAL, actually up today, was up much higher earlier. You know, sure, this thing can have a bounce here and there, but I think this has got a ways, some damage to repair before this can move up without it getting sold into. Natural gas, down, nothing there. UNH, only down 0.63%. That's good, but nothing there. Oil, down 10.2%. I mean, 10.2% in a day, everyone. I mean, in a day. It's unbelievable. VIX, a little bit of a bearish bar up here, right? Closed below the open. Up 13.9% today. This is unbelievable. Unbelievable. Verizon, nothing there. Huh. Walmart, look at Walmart. Close, it's up today, which is pretty incredible. I don't think I'm gonna go with Walmart. Energy, of course, this is gonna be down big. Financials, down big. Real estate, contending with the 200-day moving average. Utilities, down, bounced off there, nothing there. And healthcare did bounce right at the 200-day moving average. So let's take a look at some possibilities here. Facebook's possibility with under 30, over 30. Let's look at the weekly. Right there at the 200-day or at the 100-day moving average. I mean, it's a good risk to reward, but that's all it has. That's all it has is the under 30, over 30. I like Google better, that we basically bounced off of the 30 RSI. Well, 31.83, but I do like the rejection of the 200-day and the false breakout to the downside and reverse back up. And then MasterCard. So, Facebook only has the under 30, over 30. Google has more signals. The under the previous day, the previous range, reverse back up. So false breakout to the downside. It's held the 200-day moving average, which is good. I want to take a look here real quick at something. Yeah, look, even at today's low, you see how the RSI was this low here, and even at today's low, the RSI was higher than that. So yeah, I do like Google. I do like Google, looks pretty good. And MasterCard looks pretty good too. So those are my two picks for today. Of course, as long as Google holds over the 200-day and as long as MasterCard holds over the 200-day. My goodness, look at Apple rally. It's only down 6 points. Okay, and here was the Exxon trade. What's this done intraday here? All right, let's just get this one off of here because that was a 5% stop. So it looks like I'm going to be holding silver, buying the dreaded S&P 500 over the weekend as well. And then considering Google and considering MasterCard. Let's see, MasterCard is at 284.12. On the week, MasterCard did bounce off the 50-week moving average. That's good. And Google bounced off the 50-week moving average as well. So both of them bounced and found support at the 50. Okay. Zach says, what is a put? Well, Zach, you can buy a put or sell a put. If you sell a put, you want the price to go up. If you buy a put, it's basically like shorting a stock or shorting an index or a commodity. So in my friend's account, I bought puts on the Russell 2000. So basically with that trade, we wanted it to go down, and it did go down. And so good thing I did that, or we did that for him. But you know, if you Google what are puts, you can get a detailed explanation. Mount Doji says Dollar Tree may be too big of a candle. It's a little big. It's a little big, but yeah, I mean, it feels a little chasey. You know what I mean? Mount Doji, it feels a little chasey, but sometimes you never know, right? Sometimes you never know. It's 33 RSI, but if you do decide, you know, it is a V1, it is a bullish engulfing bar. It looks like it's closing above the negative third ATR channel and under 30, over 30. So it does have a lot going for it. Evan says DDM would take some stones to buy right now. Anything takes stones to buy right now. Mount Doji says SLP. Yeah, that's definitely strong. Simulations Plus. Be careful with the Google spread. Yeah, it's $1.27 spread right now. Good Thank you for letting me know that. If I buy it, I may have to just put a limit order in. So we're only down 273 points. Yeah, that's a good point. That's a good point, Joe. We're only down 200 points now. I mean, this has been an unbelievable rally here into the close. Let's look at MasterCard. Let's look at Google here. Oh boy, yeah, that's definitely some volume. Tell you what, I am gonna see whether if I can just get the bid right now. In between now and then. And then MasterCard spread is not very big. Okay, sorry, lost in thought there. Kamal says BA may do the under 30 over 30. Let's take a look. Could do. Zach says, Greg, do you not typically buy as limit order? No, I generally buy market, Zach. But most of the stocks that I buy are, they have such a tiny spread. I'm not really worried about it. But like Joe said, the spread on Google is pretty wide right now. So I have a limit order in right now, but it's not working. It's going. It's just going up. Frank says, looks like another Fed cut coming March 18th. Yeah, I read a bunch of things today talking about that it's probably going to be 3/4 of a point or 75 basis points. Take a look at the 5-day here on Google. Oof. Okay, so I did get filled at the midpoint on Google. Okay. And then MasterCard. I'll wait to the end here. So, by the way, I did get filled on Google at $12.96.10. $12.96.10. Well, that's good. It's already a nice trade so far. Knock on wood. I don't want to jinx it, right? Steve says, I just took long positions in Google, Facebook, and MasterCard. Hey, I'm glad to hear that. I am definitely glad to hear that. Whenever Steve Burns takes the same positions that you've identified, that's a good thing, right? All right, we got a few minutes. Let's just go ahead, do it. I'm going to buy MasterCard here also. I have to add something up here. Okay, so let me do this then. How are we doing on time? 2 minutes? Okay, that's fine. Okay, do that. And then here we go. Yeah, I like MasterCard. I like where the stop is, right at the halfway. Okay. And I got MasterCard at 287.23 and Google okay. Okay. Google 1296.10 and SPY 297.46. Okay. All right. So Google 1296.10. Oh, it was up so nicely earlier. Now it is down just slightly. MasterCard, I got it 287.23. Okay. Okay, Google 1296.10. Silver is just fine. SPY at 297.46. And MasterCard at 287.23. So, look, I always talk about correlation and so forth. I mean, I think these are pretty good entries. I mean, heaven knows if it's going to go up or not. Of course, I never know that, right? Who am I kidding? I never know that, but it did bounce off the 200. I like that the market showed me it bounced off the 200. My close will be a stop below the 200-day moving average on Google. SLV, thankfully, still something in the green, but has not moved more than one ATR, so I'm waiting for a close below the 200 is my initial stop, or if it moves up more than one ATR for my entry, then I'll start trailing. S&P overnight, we know the routine there. I'm going to sell that first thing tomorrow morning. And then MasterCard, bought here 287.23 with a close below the 200-day would be my stop. But, as far as correlation, pretty good. Haven't had tech for a while, so I have a little tech with Google, have a little silver, right? Not correlated. Overnight, have an index, a SPY, and then a little financial here with MasterCard. So all in all, I think good positions, diversified, very clear risk to reward ratios, right? Let's take a look, see. Okay. So Steve took Google, Facebook, and MasterCard. So, okay, so Steve put Facebook. I didn't take Facebook. Kamal says, I bought Google earlier in the day, 1261. Hey, very nice. And TGT, all right, so Google, I'm just going to put you over here, Kamal, with me and Steve. Kamal. And Steve. I'm not going to put the prices just because it's going to get too cluttered. All right, TGT. Okay, I can put the price of that one because I don't have that one. So 105. Okay. Evan still in PPLT, took position in ORLY. Okay, did you? Nice trade on that, Evan. So glad to see somebody have something going up. So let's get you down here at 364. Oh, now it's 368, even better. $364.52. $364.52. That's Evan. Okay, good. Dan, much respect to you, gang. If you are on live chat with us, hit an X on the right. The homepage is displayed. Please hit the thumbs up. You can re-enter live chat. Huh. I don't know if I quite understand that. Much respect to you, gang. If you are on live chat with us, hit the X on the right. The home page is displayed. Please hit the thumbs up. You can re-enter live chat. Zach, Greg, the other I had inquired about other videos, and you asked what would be interested. One thing that I would be interested in is looking at more in depth would be various type of charts. Oh, you mean like candles and all the other different type of charts other than high, low, close? You know, that is something I could not do a video on because I have never traded anything other than just open, low, high, close charts, Zach. I don't even like to look at candle charts. It hurts my head just because I started trading with bar charts, and so anyway, that one I could not do. Glenn says, "Hey Greg, out of Amazon." Okay, sir. We'll get you out of there. Looks like it was close to a break-even trade for you, right? Okay. Oh, types of flags, head and shoulders. You know, I really don't use those patterns, Zach. I wouldn't feel like that I could intelligently do those because I'm not really a flag, head and shoulders kind of trader. Sorry. Sorry about that, but you know, if I put something out there, I definitely want to know exactly what I'm talking about. I mean, I know what flags are and head and shoulders are, but it's not something that I use all the time, and I think there would probably be better resources than me out there for those kind of things, that people are expert in those type of patterns. Bing, he said, Greg, for moving average or for MA, there is only 200 MA under and over signal. Didn't wash out low. Is this enough for you to take the trade? Yeah, I think so. I mean, on the weekly, we rejected the 50-week moving average. I did like that. We closed in the ATR channel on the weekly. But what I really like about this is the 200-day, just like when I took the trade here. I liked the trade here because the 200-day was right in the middle, about halfway of the bar, which I always like because it gives you a very precise stop point. 50% from the low to the high, and it's dovetails nicely with the 200-day, and it closed back above the 200-day moving at, or the negative third ATR channel, and it's a higher low, and it was only down 1.2% today, which I guess it's about average now compared to what was closed. I was going off of the one we were down earlier, but and it's a great company. Jackson, good to see you. Good morning in Australia, my friend. Thanks for coming today. Kamal says, Greg has a physical aversion reaction when he sees candle charts. That is true. Kamal and I, during one of our lessons, he showed me the bar charts, or the candlestick charts, and I literally had to get kryptonite out. It was like kryptonite. It's like, no, put that away. Zach says, no worries, just trying to think of another good content. Yeah, sorry, buddy. I definitely would do content for you, but those I just don't feel like I'm an expert in enough to put a video out for that. Kamal says, same here. I've been elderized. Zach, and I'd rather it come from you. Well, if you have another idea, let me know, and if I feel like I could, up to task on it, I would definitely do it. Kamal says, MJ, yeah, I do like candle charts, so I change it to the bars when Greg is teaching. Yeah, sorry. I know Steve used candlesticks. I know a lot of people use them, but literally it makes my head spin just because I'm not used to it, right? And maybe if you grew up trading open, low, high, close, it would make your head spin as well. But yeah, Kamal and I definitely had that discussion. Well, another big day today, huh? And when I mean big, I don't mean big up. I mean, I mean just crazy day. All right. Hey, just real quick, just to do my quick daily plug, just want to let everybody know that I do offer private one-on-one coaching and teaching and mentoring lessons. I've had really good success with my clients. I love to teach. I do have a course in the evening time via Skype. It's one-on-one. It's just you and I. It's 5 sessions. Each session's somewhere between 2 and 3 hours, just depending how late you can keep your eyes open. But I teach you everything I've learned over the last 24, almost 25 years of trading, and teach you everything I've learned from all my coaches and mentors and teachers over those 24 years, like Stephen Burns and Dr. Alexander Elder and Carrie Lavorne and Larry Williams. And so it's a great course. It's really intensive. It is $1,000, but I think for the money, it definitely is worth it. You get a lot of information, you get a lot of personal attention because it's one-on-one. The first part of the lesson I teach, the second part of the lesson I have you teach it back to me. I throw a lot of curveballs at you. We do a lot of chart studying. I have you break down charts, what does it look like here? Where's our next potential trade to the upside? Where's our next potential trade to the downside? What would be our trigger? How many indicators do we have lining up? What's our position size? Is it a good risk to reward ratio? But we just do this over and over and over and over. We go through hundreds of charts. So if you're interested, I think you would really like the class. And like I said, it's $1,000, but I do think it is definitely worth it. And I think it's when you get done, you'll be happy that you took it. So if you're interested, reach out to me. My email's in the description of this video. You can also send me a message on Twitter. If you do reach out to me, I do like to have an initial Skype call. It's free, totally free, and there's no obligation. I just want to know a little bit more about you and your trading and your challenges and your goals. You can ask me any question, but I just want to make sure we're a good fit, right? For student and teacher. So if you're interested, reach out to me, Facebook or email, and we'll have that Skype call and we could go from there, right? No pressure, I promise you. And then if you like today's content, if you find it helpful, if it's helping you with your trading or investing, I really would appreciate it if you could hit the thumbs up button before you leave. It just takes a few seconds, or not even a second, I guess a half a second before you click out. I would really appreciate it. Okay. Jackson says, bit of strength into the close. Yeah. I mean, let's look at the 5 minute bar here. I mean, look at Apple. I took that 520 crossover earlier in the day, had a small loss. Look at this nice 520 right here. It happened right here. Just would let me take it because didn't close over the second ATR channel, so I would have taken it here and I would have exited here if I was trading that with a close of the day and a rejection of the 70 RSI. So it would have been somewhere 285.92 to 289.01. Boy, that would have been a heck of a trade, wouldn't it? Let's look at Google into the close. Very similar. So that's what we got. We have Goog with the bounce off the 200. 200-day is my closing stop. SLV, going to keep this unless it closes under the 200 or unless it goes up enough, goes up another 16 cents or so, then it will be 1 ATR away from my entry. Then I'll trail it with the trailing stop. SPY, of course we know that. I'm just going to sell that first thing Monday morning. And MasterCard. Close below the 200-day will be my stop. 50-day RSI will be my initial profit target. Second profit target will be the 50-day moving average, and probably ultimate profit target will be the 1 ATR channel. So that's that. And Jackson says, and then I thumbed the channel. Thank you. Appreciate that, Jackson. So apart from checking my rules, I wake up at 6 a.m., black coffee, walk to local supermarket to check toilet paper supplies, walk back, switch on computer, and do checks and chill. Checks and chill. This sounds like a pretty good saying. Checks and chill. How was the toilet paper supply scouting outing recon mission? All right. Okay. By the way, all my position size were 10% today because they happen over the 200. Well, technically, the S&P happened under the 200, but I did still take a 10% position size because it's a different trade, and then MasterCard bounced at the 200. So, all right. Jackson got 4 packs. Nice. Hey, NStyles 420, do you have a video teaching how to use the bars? You know, 420, in the description of this video, I do have 4 links. They're separate lessons. They talk about, you know, my different trading approaches, phasing in, V1s, V2s, what indicators that I have. So those are what I have right now, 420, and they're in the description of this video, and they're free. They're on YouTube. So those are the videos that I have. Zach says, Greg, another thing I have been looking at is figuring out profit targets. I watched your video again, but unfortunately on the platform I am not able to get the 6 ATR channel. Are there other good methods of determining if you don't have access to those indicators? You know, probably, Zach, what I would do is if you cannot get a 6 ATR channel, I would probably base it upon the 3rd ATR channel. But when it comes to your position size, when you're scaling out, I would probably use half, because that will kind of make it like you're going up to the 6 ATR channel as far as what you're scaling out of. You know, instead of scaling out of 10 shares at a time, if you divide it in 2, you'd only be scaling to 5 shares. I hope that makes sense. But listen, if all you had were the 3rd ATR channel and that's all you were just consistent with it, it would be fine. Are there other good methods of determining if you don't have access to these indicators? 3rd ATR channel would be fine. And then just divide your shares in 2. Zach says, does that make sense, Zach? I hope it does. Bing He, Greg, Google and MA setup is very similar. Are you not concerned on diversification? Well, I mean, you noticed I didn't take Google and Facebook, right? Because those really are tech. But Google is tech. MasterCard is not tech. It's financials. I mean, they're probably going to move up and down with each other, but that's why I didn't take Facebook, because Facebook and Google are too correlated for me. But Google and MasterCard, even though they're probably going to move up and down, are not directly, they're not exactly in the same industry. But if you take that to an extreme, then you could only take one trade ever, because almost anything would be correlated if they were stocks. All right, everybody. Listen, I've got to get out of here. I took my car down to get a tune-up. I'm going to have to walk down to the mechanic now, so I've got to get down there. So I'm going to leave you off with 2 things. As always, please try to go out and do something nice for somebody today. Just a smile or a wave or just a nice, kind gesture really could make a huge difference in their day. And it's good for you too. right? It's good for you too. So it's a good policy. Even a better policy, nice gesture, nice something for a person today. And how about a nice little gesture, a little something, a little kindness to an animal as well, right? Couldn't hurt, right? So let's try to do that every day. Maybe make the world a little bit of a better place. And then also on the way out, if you haven't hit the thumbs up button, I would really appreciate it if you could remember to hit that if you enjoy the content today. So yeah, Zach, if you don't have a 6ATR channel, I mean, look, another way is you see how far those ATR channels are away, right? The 1 from the 2 to the 3, right? Well, you can extrapolate that out. If the distance between 1 and 2 is $1 and the difference between 2 and 3 is $1, then just extrapolate out another $1 to the upside, and that will be your 6ATR channel. Okay, have a good weekend, everybody. We'll see what the market brings tomorrow or next week. It should be interesting. So have a good weekend, have fun, be safe, do something nice for somebody, and hope to see you next week. All right, take care now. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.